Welcome to another episode of the Kinvestor Report. I'm your host, Arlen Hansen, where we chat with industry experts about the market, gold, silver, commodities, stocks, and the economy. As always, this interview is not investment advice. I'm not a professional advisor, geologist, or engineer, but I have been investing in mining stocks and kicking rocks for over 24 years. Any financial interest that Kin or myself has in any companies mentioned in today's interview will be disclosed. Do your own due diligence, of course. Before we jump into today's interview with Don, I'm excited to announce that the annual Kinvestor Day virtual investor conference is happening Thursday, October 23rd. It's free to attend. You can register using the link or the bio below. You can hear from all sorts of companies that are ready to power the AI revolution. Got a great panel of speakers too as well. And today I'm going to be bringing on Don Durrett back to the show. I can't wait to catch up with him again from the last time. I'm sure he's got a lot of great updates. Some of these stocks have absolutely been on a tear. Gold kissing all-time high. I think it ran through $4,000 as of today's interview. And this gets published a couple days later. But yeah, lots of things to talk about. Well, Don, thanks again for joining me. How you doing?
I'm good. Yeah.
Let's talk about $4,000 gold. We kissed it today, right? For a short period of time. What's the current state of where we're at? Is this euphoria? Is this manic yet? Like, where do you think we are?
No, this goes back decades. This has been something that's been building for a long time. This is not, kind of a one-time. This isn't a blow up top, melt up rally in gold. Um, it's a really complex question that, I could sit here and spend 20 minutes answering. I've done it on other shows. People have followed me on, I've gone over to kind of the reasons why gold is doing what it's doing, but I'll try to condense it a little bit.
It'll make my job easy if I don't have to ask you any more questions.
Well, I could do it for 25 minutes if we only wanted to focus on why gold's at 4,000 and where it's going. So gold has been leading this year, up, I think 45% for the year. And the Nasdaq's up, I don't know, 13, 14%. So gold has been the leader. Last year they were about the same, about 27% each. And now you have to ask yourself, they both made all-time highs yesterday. You have to ask yourself why. This is not normal behavior. Gold is something that you buy when you're nervous, you're hedging. It's not an asset you buy because you're trying to make money. In the 1990s, gold did nothing. It was like $250 for the entire decade. And the economy was strong and nobody could care about gold. Well, now, and then the US economy basically peaked, I believe, in 1998, 99, 2000. It peaked. The US economy used to be able to grow on its own. It used to be able to in the 1990s. That changed once the dot-com bubble popped in 2000, and then we had the 9/11 crisis. Those back-to-back events, they basically kind of put a fork in the US's global hegemony, global dominance position, and we've been losing it ever since. In 2013, the Chinese stopped buying our treasuries. They had $1.5 trillion in treasuries in 2013. Today they have 750 million. They've sold half. And the reason why is because everything started, they're like, oh, they basically figured it out. The US dominance is over. We don't, we got to kind of get rid of this debt. It doesn't make sense to hold it anymore. And we've been on a downward spiral ever since, but it's been an illusion because the stock market's done nothing but go up for 15 years. So it's this illusion that everything's fine. But gold is the canary that's tweeting, going, no, 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 it's not fine.
The truth machine. It's the truth machine.
It is the truth machine. And it's like signaling that something's broken here. And what is gold trying to tell us? It's trying to tell us that get ready, people. Something's changing. And this is all going to, and if you start connecting the dots of what's happening. So the US, we have the reserve currency. Our US treasuries have been the number one asset that central banks have held for decades, and now that's turning around. So they're dropping our US treasuries. They're not buying our US treasuries. We are dependent on foreign money to basically finance our standard of living. We can't finance it ourselves. We can't finance a $2 trillion deficit annually. We can't do that. So that's the reason why gold's going up, because the gold's going, something's going to break here. And it really comes down to one thing. And this is the reason I'm in gold and silver mining stocks. It comes down to one thing, and it's the US bond market, the US Treasury bond market. That is the foundation of the US economy and the global economy. It's the heart. It's literally the heart that keep the blood that flows for the US economy and the global economy is that US Treasury bond market where they borrow 150, $200 billion every single month. Nobody else is even close to it. And that bond market has to stay stable. It has to work. And once it doesn't work, who
Big
wins?
trouble.
Big trouble.
Big
Big
trouble.
trouble. And the winner, when that breaks down, is gold. So I basically figured this out a long time ago, that this was the end game, that eventually the US would get into a debt bubble problem and the bond market would break. Now, I don't need to make money for the bond market to break. All I need it for it to do is to become fragile. And it hasn't even become fragile yet. That's how crazy things are. We're at $4,000 gold and the bond market isn't even fragile yet.
That's crazy.
So, right. We don't have a fear trade yet. Now, a fear trade is when you don't want to own the S&P 500. You're afraid of owning the S&P 500.
I like that.
Yeah. For instance, my grandfather was a kid in the 1930s. He was born in 1911. So not a kid. He was about 20. He was in his early 20s. But his dad lost a whole bunch of money in the stock market in 29 and 30. And he experienced that. And he never liked stocks his whole life. For him, the fear trade was always there. And so people are going to become like my grandfather. Like, I'm not buying stocks. And he loved cash. He was like, "I'll just give me cash. I'm not going to touch those stocks." Yeah. And so people now, he liked cash, but we are the generation that's going to like gold. They're like, "I don't want that cash. That cash is trash. Those bonds are trash. Only thing I want is gold. Give me some gold. Give me some silver." That's when the fear trade begins. Now, it hasn't started yet. So we're at $4,000 gold. The fear trade hasn't even started yet. It was just kind of crazy. So gold is going higher. Like a lot of people follow me. I'm a big influencer in gold and silver miner stocks. And I've been telling people, yeah, stocks are up 100, 150, 200%. Don't take profits yet.
Okay, hold this. I want to dive into this. This was on my list of questions. For us guys and women and all sorts of walks of life out there that are allowed to trade stocks, we've been in this bear market for 13 years ish, right? Give or take some little blips. How do you keep those people in? Because it's just going to feel like another false start.
Yeah, exactly.
What do you want to say to these people?
Right. So that my earlier comments basically alluded to the fact that we're still early. Gold is going a lot higher. So that's why I say don't take profits yet. Let's $4,500 silver gold is, I think, it's just coming. There's just nothing going to stop it. And so if that's what's going to happen, okay, let me back up a little bit here. Who's telling the truth, right? Because the stock market and gold should not both be at all-time highs at the same time. It's heresy.
It's one of them is telling the truth, is what you're saying. One of them's lying, one of them's telling the truth.
Exactly. One of them is the poser, and I'm telling you, it's the stock market. The stock market is the poser. So if stock market is the poser, we're going to have a decoupling event, and gold's going to go higher. So even if we have a correction, I always say stay on this train. You got to ride the bull market. So you want to stay on. Yes, you're going to dip. Yes, your portfolio is going to go down 20%, but it's probably not going to go down 30 if you're in a bull market. In 2008, my portfolio went down 70%, but I was back to even fairly quickly, and I got through a 70% correction. So even a 30% correction is not really that deep, but I don't think portfolios are going to go down 30, gold and silver mining stock, but I think they'll probably go down 20. 15 to 20 is what I expect, maybe 25, but 20 is about. So let me finish this thought. So if that's all that's going to happen and you're going to weather the storm, let's just wait. Let's be patient here before we take profits. Let's get to $4,500 gold, which will happen next year, I believe. Let's wait till we get there and then we'll reassess. Now, right now, gold, I believe the gold it's at our back. The wind's at our back if you're a gold and silver miner. If you own physical, it's at our back here. Silver has never broke above 50 ever, and it's getting ready to. When it gets above 50, that's going to be the new floor for silver. And then silver is just going to keep ripping higher. Silver will probably get to 75 next year, and my target of 100 in 2027. And so we have these big numbers ahead of us. So why take profits now? Let's be patient. Let's go to 4,500 before we even think about taking profits.
Mm-hmm. Well, I think to be able to hold that, you got to have conviction, right? You just got to, you're convicted. So this is easy for Don Durrett because you're convicted,
Yeah,
right?
absolutely.
There's a lot of people out there that just don't have the conviction that you and I have, right? But I agree with you. Like $4,500 gold, that's only 10% away. Now, Don,
Exactly.
that's nothing. That's like
Well,
that's
it's highly levered to the miners though. That
yeah.
10%,
And
that
like
10%, that 10% move will make 100% move in the miners.
so let's talk about over the last quarter, we've seen this massive melt up. I don't want to use the word melt up, this massive run in gold. But we seen like a big increase in inflation and expenses at these mines. Like the
Wow.
quarterlies that are coming out
They've been,
they're gonna be insane. Like
yeah, yeah.
right?
I,
And
I,
that's when these
I'm
generalists will see
seeing
it.
exactly. I'm seeing the initial Q3 numbers. The Q2 numbers, we didn't have much inflation. I'm seeing the initial Q3 numbers. The free cash flow is really high. None of these companies are experiencing inflation, and so we're going to have some stellar, absolutely stellar numbers in Q2, Q3.
Hmm.
Well, Q3, we're already through Q2, but the Q3 numbers are going to be stellar. And then the guidance for Q4 is going to be stellar too, because I don't think oil prices are going to go up until next year. So inflation is somewhat under control for these miners.
Hmm.
And so, yeah, the multiples are going to start going higher.
Well,
Yeah,
people
so
aren't going to be able to say, "Hey, you never make."
it's kind of a perfect storm here for miners. Uh, for the next 12 to 24 months, because gold's going to go higher, and I think inflation's not going to rip. It'll go up a little bit, but it's not going to rip higher. So the margins are already at 45% right now for gold, which is crazy. So and silver is about 30%, heading to 45% fairly quickly at $55. And then silver, I mean, silver is going to pass up gold and get a 50% margin here, I believe, Q1 of next year, Q2 of next year. So the silver miners are going to are actually going to they're going to really start outperforming the gold miners, because as silver outperforms gold, then the margins start really expanding on the silver miners. We're going to see some really massive margins in the silver miners here when silver outperforms gold. When that GSR squeezes down from say 80 to 65, you're going to see some massive margins on the silver miners and massive moves on the silver miners as well. These stocks aren't pricey yet. We were at 200 on the HUI back in February 2024, less than a year ago, and
Mhm.
we're at 600. So
Yeah, I was actually talking.
we've had quite a move here, and they're still cheap. It's kind of insane.
That's actually interesting because I was talking to Adrian Day in my podcast a couple weeks ago, and we talked about the same thing. And I said, "When are these expensive? When do they start getting expensive?" He's like, "They're cheaper now than they were a month ago. Like based on how much money they're making, they're still cheap." And I think that's just something people got to look at, right?
There's
Like, it's just because the price, like the ticker number is higher, doesn't
right.
mean that the valuation is higher.
It's crazy. The only pricey silver stock, and it really isn't that pricey, is Fresnillo. And
Hmm.
believe it or not, it's not that pricey. I mean, it's still got like three bagger, maybe four bagger upside, but all the others are like five bagger plus. It's like now this is $100 silver, but $100 silver, we get to next year, it's not going to look so far away. Once we get to, like I said, next year, I think we go 65.75. You close 26 at 65.75, $100 is nothing in 27.
Oh, 100%, 100%. Yeah.
Yeah. But
Okay.
don't expect $100 silver in 26. I mean, it's possible, but I think, 70, $80 is kind of a good target for 26.
A
And
reasonable target.
if
Yeah.
we, yeah, we get above $80 in 26, and these miners are going to go nuts.
Yeah. Yeah. Well, it's been interesting. It's been so long since you can come to the industry and say, like, oh, you guys make money. It's been so long, right? There's been
Oh,
a select few mining companies that actually make
in
money in the last 15,
Intel,
20 years. So every generalist fund out there is like, mining never makes money, right?
exactly.
Wait till they see what hits them over the head these coming quarters. They're going to be gushing with cash flow,
Oh,
gushing,
yeah. Yes, yes,
right?
yes.
And all of a sudden, these generalists are going to go, oh, what's this sector? And then they start putting 1% of their portfolio into gold and gold stocks. And then this is where Rick Rule's little thesis comes in that nobody owns gold stocks. It's
All
crazy.
right.
So you've got a
Yeah,
huge, so you've like when if we follow gold stock data, you've got a huge laundry list of gold producers, silver producers, and that's basically how you manage your portfolio. You just kind of follow these guys on PE ratios and all that. Is
yeah,
that correct?
yeah.
Yeah.
I chase free cash flow. That's
Yeah.
what I do. Yeah,
Awesome. Okay.
that's what I've always done. I
Any
have, and my favorites list, I have 83 stocks. There's only one exploration company.
Okay, well,
Exploration
can we
company,
ask which one that is? Can we ask?
yeah, Free Gold Ventures. And the
Okay.
reason why is because it's unique. If they keep 50% of that company, and that's what if I was on the board, I basically just say, we're gonna sit here and wait for a phone call from Ken Ross. And when they call us, and they say, we want to buy your company, fantastic, it's for sale. And then wait for them to say something, great, it's for sale. What, well, this is what we're gonna pay. No, 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 it's not what you want to pay, it's what we're offering. We have a for sale sign, it's our house. We set the price, not you. And we basically say 50% free carry and it's yours. And they're going to hang up. They probably won't even respond. They'll just probably hang up. And then we wait for them to call back again. We want to negotiate. No, no, the house price is the house price, 50% free carry. Well, guess what? If Kinross does that, if they do a 50% free carry, which is normally would never happen, but Kinross is sitting there with a mill that's right next to that property. And it's like, it's a perfect fit for Kinross. So Ken in this situation, they probably do it. They get half of the mine, and they don't have to basically give any money to Free Gold Ventures, not a penny. They just have to build the mine. It's like you build the mine, it's yours. You get half of it, build it. It doesn't cost you anything to build it, right? And the capex isn't going to be that high for you're talking about 800,000 ounces a year production. And the capex isn't going to be that massive because they already have the mill.
Yeah.
So 50% free carry is a perfect deal for them. So guess what the upside is if they get a 50% free carry? It's at least a 10 bagger, probably a 15 bagger, because they get 400,000 ounces of free cash flow for free
A year if they did
for
that deal.
20 years, cash flow. So it makes that company worth a fortune. So that's the only one. It's a unique situation, so on reason. So the other two, I do producers first and developers second. Those are what I call elasticity plays.
Okay.
Both of those are highly elastic to the gold price or silver price. The gold price goes up, they go up because their MPVs are all based on the value of gold and silver.
Yeah.
And so the value of the companies just go up. And it's just a matter of how much leverage these companies have, and they have a lot. So that's what I focus on, and then I focus on the free cash flow, potential free cash flow of the developers and the producers, and it's easy to value them. I basically take a future gold price. Currently, I'm using 5,000 gold, 100 silver, but those are now becoming too conservative. They are,
Yeah.
they are.
Right.
And
Right.
so my upsides are, they're probably higher than what I have on my website.
Yeah. I don't like telling people where I think gold's going because they look at me like I'm crazy.
No, no,
And I also
no,
say I don't think we want to see gold here either.
no. You're right. The potential for gold. Any number you throw out there is actually a legitimate number, depending on what happens going forward with the bond market and U.S. economy. The worse it gets, the higher the gold price goes. So we know that kind of a minimum price is about 7,000. That's like a minimum, right? That's when things go. That's when things we fix the problem, right? The minimum of 7, and then it just goes up from there. Lassonde threw a $17,000 number out there a week ago,
Yep.
and he's basically saying, I'm expecting things to break. So it's like 17. I've seen 25s. I've seen a lot of 10s.
Mm-hmm.
I'm in the 7-8 camp because I think that we'll reset. And when we reset, gold will stop going higher. And so,
Right.
I also think when we do reset, we're going to get a new dollar. So the seven, so it no longer makes any sense to go beyond 7 8 because it's all going to get reset,
That
rebound.
anyways.
Right?
Yeah.
So
Yeah.
I don't think we'll get above 8 before the reset.
Yeah. I think you should come hang out in my bunker sometime up in Squamish. We'll hang out and we'll go down the rabbit hole and we'll talk about gold.
Yeah, absolutely.
Yeah, right
And
on.
the only bad thing is, I mean, we're smiling here is this is all bad news. This is gold. That's the problem here. I mean, Wall Street is like happy. They're like happy that we're at an all-time high in the stock market. I mean, if you turn on the news channels, the cable channels, these people are all very successful. I mean, they've been making money for 15 years. All the stock market's done has gone up. I mean, these are very affluent people, very successful people, and they're happy, and they think that the normalcy bias is going to continue for another 10 years. Well, I got news. It's not. And gold,
Illusions.
exactly. It's not. And gold is basically screaming, be careful, be careful, be careful. And the thing that's nasty is that when this stuff breaks, people are going to get hurt in a bad way. I always go back to The Big Short where Brad Pitt goes, quit dancing. Remember that scene? He goes, people are losing their houses. That scene really, it's really applicable to what's happening today. The gold and silver mining investors shouldn't be happy that we're winning, because if we're winning, there's going to be a lot of losers, and it's just starting here. And it's gonna. I've always known this is kind of a catch-22 that I'm going to win, but I'm also going to lose. My lifestyle is going to go downhill. My standard of living is going to go downhill. My family and friends are going to get rug pulled. This is bad. This is awful.
And it never feels good being the only one that's not rug pulled.
Exactly.
Right?
I mean, America in my lifetime, I mean, I grew up in the 60s. I was born in 1960, 60s, early 70s. I grew up. America was a beautiful place. Absolutely. I mean, it was a beautiful place to grow up in that period of time. America was at its top, right? And since then, it's only gotten better with technology. So our lifestyle, our quality of life is amazing, absolutely amazing, right? I mean, look at us. We're sitting here doing a podcast. I go over. I can order anything I want, and it'll be delivered tomorrow.
Crazy.
I mean, the quality of life is off the charts, right? Well, guess what? That's all going bye-bye. We're getting rug pulled. Our lifestyle is going to get pulled, and this isn't good. This is bad.
Well, our quality of life's there, but like, are we any happier as a society? No. Like we're more anxious, we're more stressed out, we're more higher suicide rates, we're more of everything awful. Right. So yeah, we could talk about that for a long time too. Right.
No, I think it's applicable here. That's the problem, is that it's not only the supply chains breaking down, our quality of life going down, but it's also the stress going up, where people are when you're used to a certain way of living, change is hard. We're emotional, humans are emotional beings.
Oh, for sure.
If things get more difficult, they're going to become more stressful. And so that's what I mean. That's the hardest part about all of this, is that change is coming in a big way. And if you think we're going to get through this financial crisis without change, you're delusional. It's not happening. This is a crisis that's getting ready to begin. Now, some people think what I'm saying here is hyperbole. Everybody's been talking about this. No, this is something that's been building for decades, and we're not getting a free pass on this one.
No,
the United States this isn't a Joe Biden situation where this don't bet against America situation. America's political system is broken, and it's not getting, and it's a chasm that's gotten so wide that our values have literally diverged. And they're not coming back together. They're just not. There's only one path out of this. There's only one. And I write about it in my book. I wrote a book called The Path Forward. There's only one way out, and it's change. That's the only way out. We have to change. And change is no fun. And so gold is really the signal that change is coming. And if you don't, and all it's going to take is the stock market. We live and die on the U.S. economy and the U.S. stock market. Once this bubble finally, this melt up finally ends, and the stock market goes down, that's when it all hits the fan. because Americans live and die by their net worth.
You kind of struck me something early, and it kind of carried on throughout the interview. Is when you said illusion, I started laughing because of the TV show Arrested Development, and his brother, who's the magician, he always says the illusion. And you're right, it is an illusion, right? Everyone thinks the economy is doing well because they're making money on these stocks, and oh, the Nasdaq's at an all-time high. When you that fear trade, but that you talked about it, when your next door neighbor no longer wants to buy the S&P or the Nasdaq or the big boards because they're too scared, they're not going to make money or they'll lose their money, they're gone, and that is not going to be a very pretty time.
Nope. That's what I've been.
And just a tiny percentage of them will be coming into the gold market and silver market too. Just a tiny, right? Because they'll be so scared to invest in anything too, that a small percentage will. And yeah, that's going to be a scary time.
We don't need very many. It's such a tiny market.
No. Okay, so can you throw a couple of names that you think are really good operators? Because if you're chasing cash flow, therefore you're chasing good operators. Who are the good operating companies out there?
Well, most people, I'm going to actually go with kind of the newbies here, because there's going to be a few newbies that watch this. Just in the mining, I mean, in the S&P 500, 62% of all of it is index funds. 62% is passive. So you can do the exact same thing with miners. You can do passive, and the way basically, but it's not really passive, but it's kind of passive. And you can do ETFs. So now these is Americans. Some foreigners can't, right? But there's 3 silver ETFs and about 6 gold, maybe 9 gold miner ETFs globally, but there's a bunch of gold miner ETFs and silver miner ETFs. And you can just, put a little bit in each one of those, and you're kind of a passive investor and your risk isn't so high. So for the newbies, that's what I say. Just do the ETFs, and just ride it, because those ETFs they're going to perform substantially well. We're talking about, the GDXJ this year is up 135%. 135. That's passive investing, 135%. And if gold keeps going up like this, I mean, you're going to make money. So I think, but now I'm going to have a caveat with that. Gold and silver mining is speculating. You're speculating. So if you do buy those ETFs, you're speculating on one thing, the price of gold and silver. And gold and silver mining stocks are always going to be volatile. So if you buy ETFs today or tomorrow, expect to be underwater at some point, maybe as much as 30%. The bull is going to buck. The bull always is going to buck. So if you are going to do ETFs, the caveat is you got to be a believer in gold and silver. You got to be willing to speculate. You got to be willing to handle that volatility. If you can handle those 3 things, then the ETFs are kind of good for you. Now, the mining stocks, those are for the people that are kind of chasing bigger alpha. You're not going to really, you are going to get some really good returns on these ETFs. Like a lot of people can't beat the ETFs, right? You can't beat the indexes. But if you're good stock pickers, you can. But that takes some work. It usually takes about 2 years to kind of understand it. But I wrote a book.
Oh, at least.
So my book, if you go to Amazon and just do my name and do gold silver, you'll find it's got a black cover.
Okay, we'll put the link on our website too for you.
That book explains in detail how to understand these stocks. And you can skip chapters 1 through 5. I start doing the miners at chapter 6. I always say you only have to read 6 through 10. And you'll understand these things fairly quickly. You'll get up to speed fairly quickly because I've written it in a way that it's pretty comprehensive. I consider it a textbook. And so that book, if you want to chase some alpha and okay, Don, okay, those ETFs are fine, but I want to go chase some of these 10 baggers that you
I want to lose some sleep tonight. Come on, Don.
I want those 10 baggers. So if you want those 10 baggers, then read my book.
Awesome. Don, thanks so much for the time. Always fun talking to you. And yeah, you're a wealth of knowledge, and really appreciate your input here. And I'd love to bring you back on again in 6 months. We'll check on where we're at.
Absolutely. We'll do it again. Thanks for having me on.
Yeah, thanks. Take care, Don. Cheers. Bye-bye.